Hello, everyone, and welcome to Marina Times Hard Talks. I'm Crystal, and today we're taking a closer look at one of the biggest stories affecting global financial markets. Joining me today is financial market analyst Arthur. Arthur, thank you for joining us today.
Thank you for having me, Crystal. It's always a pleasure to be here.
Let's begin with oil. Following the recent escalation between the United States and Iran, we've seen oil prices react almost immediately.
Without a doubt, geopolitical tensions have influenced oil prices. What we've witnessed recently appears to be similar to the early stages of conflict, brief military skirmishes that created uncertainty across global markets. Since the latest developments, Brent crude has gained roughly $4 per barrel and is currently trading above $78 per barrel. However, we're still trading well below the highs reached during the punch-downs, during the peak of the conflict. My expectation is that markets will continue responding cautiously as diplomatic negotiations gradually resume. Current crude inventories remain relatively tight. For that reason, I believe major global powers have every incentive to avoid any prolonged conflict that could push oil prices significantly higher and fuel another wave of global inflation. Overall, while recent exercise measured responses, and we're likely approaching the latter stages of this geopolitical episode.
Beyond oil, cryptocurrencies have also reacted to these developments. Bitcoin, Ethereum, and several other digital assets experience increased volatility. What is your outlook for the cryptocurrency market over the coming weeks?
The crypto market has experienced pressure from two major developments. The first relates to geopolitical uncertainty in the Middle East. The second concerns reports that Strategy, the company formerly known as MicroStrategy, could reduce part of its Bitcoin holdings to meet liquidity requirements associated with coupon and dividend obligations. Interestingly, I believe that if Strategy gradually reduces its concentration in Bitcoin, the market could ultimately respond positively. Many institutional investors have expressed concerns about the concentration risk created by having one company hold such a significant portion of Bitcoin's circulating supply. A more diversified ownership structure could strengthen market confidence over the longer term. Although geopolitical headlines have triggered short-term volatility, I believe we're approaching the bottom of this corrective phase.
Some analysts believe these developments could create two-way pressure, based view on cryptocurrency prices causing fear in the short term, while also presenting buying opportunities. Would you agree with that assessment?
Absolutely. Periods of uncertainty often separate short-term traders from long-term investors. During moments of panic, weaker hands typically sell their positions. Meanwhile, experienced long-term investors often view these corrections as opportunities to accumulate quality assets at lower prices. Ultimately, demand and supply will determine where prices settle in the short term. However, from a medium to long-term perspective, I remain constructive on the market. Our expectation is that once current uncertainty subsides, the broader cryptocurrency market will continue its long-term upward trajectory and experience a gradual appreciation in value.
Arthur, thank you once again for sharing your insights with us.
Thank you, Crystal. It was a pleasure being here.
And thank you for watching another edition of Marina Times Hard Talks. Don't forget to like, subscribe, and turn on notifications so you never miss our latest market analysis.